Doug is the president of the American Action Forum, and if his name sounds familiar to you, he was the chief economist of the Council of Economic Advisors, and he also was the sixth director of the CBO, the Congressional Budget Office. Hey, Doug, good morning. Thanks so much for being here. I know you were in Colorado a few days back. Do you miss it already?
I missed it already. I'm in Washington, D.C. It is beastly hot and humid. I want to go west.
I don't blame you one bit. Ross went to high school in Bethesda. I have to stay in character here, Doug. Ross went to high school in Bethesda, Maryland, so knows exactly what you're talking about with beastly hot. I mean, D.C. used to be a hardship post for government workers way back in the day. So,
well, as you will recall from your history, D.C. was a swamp. And you can put as much pavement as you want over it. It's still a swamp, and that's how it feels.
And it's still impossible to drain in every possible way, right?
Yeah, pretty much.
All right, I got two main topics that I want to talk with you about today. One is you've got these Democratic presidential candidates scurrying around with various versions of proposals to forgive student loans and make at least some kinds of college either free or debt-free. And I guess they haven't read their Bastiat, but, how should we think about what they are proposing?
Well, you can usually take any proposal and look at it from two perspectives. One is sort of the underlying fairness of what's going on. And I think these forgiving the student debt proposals trouble a lot of people because, A, they forgive those who are capable of paying as well as those who are having trouble. It doesn't matter on your income. But it's also true that the government has all sorts of loan programs. They have small business loans, they have farm loans, they have loans across the board. Why are these the ones that get forgiven? Why not the other people? So there's never been a compelling story as to, why these guys. Second way you can look at it is what will the reform do for the effectiveness of the underlying issue? And there's nothing about forgiving some past student loan that's going to send one more kid to college, make colleges actually deliver higher value at lower tuition costs. There's no efficiency coming out of these proposals. So it's a really troubling sort of set of proposals, these loan forgiveness issues.
As a longtime student of economics myself, in fact, I studied econ at Columbia when you were there, it seems pretty obvious to me that one sure way to ensure that prices go up is to disconnect the consumer from feeling the cost of the thing that they're consuming. And that's what government does over and over and over with college and with healthcare, by the way, which is why these two things keep exploding in price. Is that conventional wisdom wrong, or is that right?
No, that's right. And, for someone who thinks about it for about 10 seconds, we see the same story in health. We see it in college. You see it in daycare, right? Child care is the latest, right? This is too expensive for Americans. We will give them some money, thereby increasing the demand for the product, thereby raising its price. It is an absolutely counterproductive way to deal with the underlying issue. If something is too expensive, you need a greater supply of it and more competition. And until you do that, none of these government programs are going to help the underlying problem.
I don't know how much you think about this particular issue. Obviously, a lot of things on your plate. If you do think about it a lot, what would be maybe one or two key bullet points that you would recommend to the President of the United States or to Betsy DeVos about things that could be done to start limiting the inflation in higher education pricing?
Well, I will say that doesn't exist in a vacuum, and some of these things are happening anyway. So you'll see a lot of newspaper stories now about small liberal arts colleges going under. The population getting smaller, so we're having fewer high school graduates out there. They're having to compete more for them, and those that are not delivering a degree of value are finding themselves really in trouble. I'm an alumnus of a small liberal arts college in Ohio, and we have those alums who have talked to the president have openly discussed how you have to deliver not just a liberal arts education, but some sort of ability to do a job when you graduate and in order to be competitive. So there's a lot going on to begin with, and that'll help. But the thing colleges in the United States have never done is compete on price. They compete on beauty of campus, climbing walls, dorms, all sorts of amenities that have nothing to do with the tuition you pay and the skills that you walk out with. And so everything should be focused on delivering some transparency about what things cost and what success you get with them. And if you're a government program, you should pay for results. We shouldn't be giving people Pell Grants to go to college. We should be giving people Pell Grants if they complete the first year of college, and then another one if they complete the second. There's no outcome orientation in any government program. Those are the bullets I'd give them.
Doug, do you think there should be any differentiation in terms of government grants or loans based on the likely potential earning power of a person based on the degree? For example, loan more to a civil engineer than someone studying transgender pygmy comparative literature?
I would let anyone take out the loans that they want, but I'm not in the forgiveness business either, right? So if you start getting into the business where you are becoming a de facto parent and saying you can do this, you can't do that, I'll give you more money to do that, you put the government in a role I'm not entirely comfortable with. Mm-hmm. I think the government's role in higher education should be very limited with genuine grants, not loans to low-income people who deserve that. And if you have a loan program, let the private sector run it the way we used to. They'll do underwriting. They'll take a look at that theology degree or that philosophy degree or that humanities degree very differently than the civil engineering degree, and the loan market will work. And the government's only role there should be perhaps guaranteeing the backstop for private lenders. My
very special guest, Doug Holtz-Eakin, president of the American Action Forum. Their website is americanactionforum.org. Doug was head of the President's Council of Economic Advisors and then director of the CBO. So you started leading down another college loan road I wanted to go down with you that I think people don't understand enough. Could you please explain how and how much Obamacare changed the student loan world? I don't think people really get it.
Oh, it was a revolution, to say the least. Prior to the Affordable Care Act, the largest activity of the federal government in the student loan area was to guarantee private student lenders. So you would go to the bank, you get a loan, it'd be guaranteed by the federal government, so it would come to you cheaper than it otherwise would have. That was the form of subsidy. The bank had a guarantee on the repayment. So that's largely what the federal government did, and had a small direct loan program where the money went straight out of the Treasury to students. The Affordable Care Act, Obamacare, eliminated entirely the guarantee program and turned every government loan into a direct government loan. The largest portfolio of loans is now on the Department of Education balance sheet, and it's by no means a high-quality lender. So we changed the nature of the lending business. We gave the primary responsibility to an agency that's not equipped to do it very well. If you think about student lending now, it has all the characteristics of the subprime crisis, which is we give you a loan no matter what the quality of repayment is. Right? We don't check to see if people can repay. We just give them a loan, and then we get into trouble with it. And people are surprised. They shouldn't be surprised. There's no genuine underwriting, no checking for capacity to pay. We don't discriminate with the uses of those dollars. It doesn't matter what your degree is, what your university is. It's a highly, highly inefficient and poor program. It's the only student loan program now because of the Affordable Care Act. Now, why would you do such a thing? Due to the magic of government bookkeeping, and I will not kill any of your listeners by going through all this, the loans look cheaper if they're direct loans than if they're guarantees. And as a result, by switching every guarantee to a direct loan, they saved a little bit of money on paper, and thus they paid for part of the Affordable Care Act, about $30 billion, and it was part of getting it over the finish line.
And, of course, it was part of something that the left had wanted to do anyway because they were constantly bitching and moaning about the fact that somebody was making a profit, as they often do.
The loan program for years, no question about it. The late Ted Kennedy, in particular, was a vocal critic of the guarantee program and wanted to have it all be direct lending, and that was one of the things that pushed this through.
You know what? Functionally, for the American taxpayer, and maybe you could also answer functionally for the borrower, what is the important difference between a loan directly from the government and a loan from the private lender if the private lender has no risk because it's a government guaranteed loan, which is something I almost never like to see.
In principle, there's no difference. Like you can write it down on paper. In practice, it will depend on whether you get exactly the same pools of people going to the two places to get a loan. With the direct loan program, it is done through universities and colleges, so they actually identify the people and do the administration. The other was through the private financial sector. There's a little bit of difference there because you think about who colleges are recruiting, you're going to get different people. And then the biggest difference is the private sector has a better track record of finding those who are starting to get behind in their payments, talking to them, asking what's going on, and getting them back on schedule. So you get more arrears, more in the way of defaults out of the direct loan program because the government's not a very good manager of the lending program.
Makes sense. All right, let's switch gears. You wrote a piece up at the Daily Dish at AmericanActionForum.org entitled About as Transparent as Mud, talking about an executive order from about a week and a half ago about price transparency. And I wanted to bring this up because the government here in Colorado was actually thinking about doing a very, very similar kind of thing on the state level. So what is this, and why do you think it won't work?
Well, I don't know if it won't work because I don't know what it is. But here's what it is advertised as. At the moment, you've got an insurance policy, and your insurance company has negotiated with the hospitals in your area for the rates that they will reimburse for different procedures. And you don't know what those prices are. I don't know what those prices are. Mm-hmm. Nobody knows what they are. So the president's executive order says to the Health and Human Services Secretary, make those prices transparent. So the question is, what does that mean? Well, it could mean that for a narrow set of prices that are those for Medicare patients or Medicaid patients, places where taxpayer dollars are in there, taxpayers should know what the prices are, and we should find those out. Or it could mean that they're going to take a commercial transaction, which is really a private contract between an insurer and a hospital, and they're going to break it open and display it to the public. I think that's a horrific mistake. There should be sanctity to private contracts, so I'm interested to know which is which. There's also the issue of what does this do to the nature of the negotiations? So if I'm a hospital and I've given a cut rate price to one of the insurers, say United, I don't really want to know Aetna. I want Aetna to know that I've done that. Mm-hmm. I can still maybe, cut it not as much for them. If you're making all of these things absolutely transparent, it could be we know what the prices are. They're just all really high. And that would be exactly the opposite of what I think they hope to get out of this. And the essence of it is that our health markets are so messed up, that's a technical term, that there is really not a lot of capacity for individuals to shop in the way that we imagine in other circumstances. And so we rely on the insurers as the cost control. They're the ones who want to negotiate, keep prices down. If you undercut their ability to do that, we've sort of gone in the wrong direction. Yeah. So, I'll be honest. I really don't know what they're going to propose in the sense of which contracts will be affected. I also don't know if they're going to give us every price, give us the average of prices. We could get a number out that doesn't mean anything to anybody. It remains to be seen. So stepping back for people who don't follow this day to day, the administration's been extraordinarily active in the health area, drugs and healthcare more generally. I, as a general rule, applaud their efforts because there's a lot that needs to be done. Most of what they're trying to do is to give people more choices, more information about those choices. It's just that it's a complicated world, and sometimes you're not sure exactly what they're going to get out.
Yeah, so I agree with you. I think the most likely thing, if they do something like this, would be they'll put up full retail prices and then have a little asterisk, and at the bottom it'll say "Apply for your discount within."
Yeah, who knows?
And we'll probably end up with something like that. All right, my last thing for you, Doug. I could talk to you all day, but we only have about 2 more minutes here, and this is kind of combining politics and economics. I'm very concerned as a fiscal conservative that we have $1 trillion deficit at more or less full employment and increasing deficits with a booming economy for, I think, the first time, and a Republican Party which doesn't seem to care very much anymore, in part because the guy running the party doesn't seem to care. How worried should I be? I got 2 young kids. How worried should I be about this?
I think you should be very worried. I'm absolutely appalled at the state of our affairs. I'm a former director of the CBO. I've spent my adult life on this issue, and it is incredibly troubling to have both parties utterly uninterested in making the numbers add up. And you said it exactly right, which is this is the first time in history we've had deficits and debt of this magnitude outside of wartime at full employment. And the only explanation for why we're doing this is an unwillingness for them to do their jobs. They don't pass budgets, they don't get appropriations done, and they're not dealing with the fundamental problem, which is the growth in entitlements. And that needs to happen. And it needs to happen if only for the following sort of simple reason. The entitlements themselves are not going to survive.
Right.
Social Security is going to exhaust the trust fund in under 15 years, and everybody in retirement is going to get a 25% across-the-board cut, which is an horrific, embarrassing way to run a pension program. So, on behalf of the beneficiaries, could we please just get some reforms and make this add up? That would be my July 4th plea to our leaders.
Mine too. We'll leave it there. Dr. Douglas Holtz-Eakin is the president of the American Action Forum. That website, americanactionforum.org. Oh, wait, I forgot. I got one other very important thing for you. I need to ask you this. I've had 3 cabinet secretaries, multiple senators and congressmen answer this question for me, but I really want to ask you from the perspective of the proper way to balance the federal budget, okay? This is a very important question. Sock, shoe, shoe, or sock, shoe, when you're putting on your socks and shoes in the morning?
Sock, shoe, always.
Right. See, you're a great American, Doug. I knew you'd give the right answer. My producer, Shannon, keeps struggling to find someone who does it his way. But now, folks, you have the official answer. If you want to balance the American budget, it is sock, shoe. Doug Holtz-Eakin, thanks so much for your time. You're an awesome guest. We'll definitely have you back. Have a wonderful July 4th.
You do the same.